all tax is money taken from someone. So, so when someone says it's, or when someone says I'm not getting the same tax break that I was getting earlier, and they say, but so it's just me getting my money back. No, because you're just not getting the same tax break you were before. That's a tax increase. If I give you back your tax break, that's a tax cut because you're now paying less tax. So in terms of mortgage deductibility, interest deductibility, tax is usually paid on the income received. So an income received is net income. So when you make payments out as a firm, the net income after you've made all of your payments is what you then pay tax on. So if it costs you $100 to make 100 loaves, but you sell them for $200, you've made $100 net income, and you pay tax on the $100, not the $200 of activity that's taken place.
Yeah, the profit.
That profit. Interest is a cost against profit. And so the argument goes, you should be able to write that off as a cost as you would house maintenance, as you would insurance, as you would anything else that costs you in running a business, because you're running a business when you rent a house. The strange thing about housing is that it doesn't obey any of the other rules of running a business.
Yeah,
if you buy a piece of plant or equipment and you turn the key in the ignition because you just bought it, it devalued instantly. And if you basically traditionally run a piece of equipment into the ground, so you've got a depreciation line for that. Houses go up in value. And when the government is giving you your interest back that you're paying the bank, it's actively helping you create new wealth for yourself and for landlords. And so as a consequence, the Crown ends up contributing to the new net wealth of a landlord. So the landlord is better off as a consequence of the Crown's tax position.
I think it was Anna Burns-Francis who said to the Prime Minister on one of her shows, when he was saying things like, well, every other business just gets to pay this much in tax. And she said very quickly, yeah, but every other business also pays tax on their capital gains, whereas a landlord doesn't. So it's not like every other business, is it?
Well, so we don't, no other firm in New Zealand or no other industry in New Zealand pays tax on its capital gains, because we don't have a capital gains tax in New Zealand. But people do pay tax on the income that they've generated. Workers pay tax on the income they earn from the first dollar of income that they own. Then landlords are the only ones who get to write off the costs, the interest costs of actually helping them to create an asset that gives them additional wealth that's not taxed anywhere. So if they were taxed when they sold the property later on, that would be fine. We could do interest rate deductibility because they've paid tax at some point in the system, just like someone who earns a living has paid tax through their wages. Landlords are the only people who get to write off the costs of earning that living through interest rate deductibility and then pay no tax at the point of sale for their property.
Yeah. So rather than saying other businesses pay on their capital gains, we should be saying other businesses pay on their profits or their income.
Their profit and all of their income. So most systems in New Zealand for tax are what are called EET, exempt, taxed. So you pay money to get materials or goods and services together to deliver a service. You get to write off the taxes at that point. That's exempt. When you sell goods or services, you collect GST, but that's also exempted because it's paid for by the end consumer. Your profits at the end of the day are taxed, EET.
Gotcha.
Property is the only source of income, which is EEE. It's exempted all the way through.
Yeah.
And so the only tax that's paid is on the rental payments. And so what mortgage deductibility does is adds a huge tax loss to the rental payments. So the tax lost through those rental payments is then much reduced. The side effect of that is it makes renting a hugely more attractive industry that pushes up house prices because lots of People want to get into that as a much more tax efficient way of saving. And secondly, it reduces the ability of first home buyers to buy a house, because landlords can buy a house knowing they can write off their interest costs, whereas a property owner can't.
Kia ora again, whānau. The clip you've just watched is brought to you today by our patrons. If you want to be a part of what we do, if you want to get behind what we're doing, if you're enjoying our content and wanting to share our content, then maybe you would consider being a patron to Big Hairy News. Head to www.patreon.com/Big Hairy News to sign up to one of our levels and be a patron. At this point, we are only a listener and viewer supported show. It all comes down to you guys. If you feel like jumping on board to help, then head to patreon.com/Big Hairy News. Hooroo!